Good morning, it's Friday the 12th of May. This is the Phoenix update brought to you by Tom Colley. Right, we've had a relatively quiet week in the marketplace. A few things going on. We've seen a couple of days of dollar strength, Monday and Tuesday, but then predominantly we've seen a rather quiet market. We did see a move on the pound yesterday when with the Bank of England rate announcement and the press conference from Mark Carney. So let's go over to the news and have a look at what we saw yesterday and see what's ahead today. So yesterday we had some disappointing manufacturing production for the UK. That started pressure on the downside to the pound. We then had the Bank of England inflation report. The Bank of England reported that inflation is likely to exceed its previous targets, driven by exchange rate issues, Brexit generated, etc. They announced that the bank rate would remain at a record low of 0.25%, with only one vote against retaining that rate. For some reason, there were only 8 members who voted this month. I can only assume there was an illness or something. So that's not a variance. It effectively, because there were only 8 there to vote, means that we had the same scenario as we did last month, where we had 1 member voting again. So no change there. We then had Carney speaking. He was suggesting that the UK economy would quite possibly exceed their target for inflation. He also said that that would probably lead to rate rises, or possibly lead to rate rises earlier than investors expected, but also at the same time, which confused me slightly, suggested that that wouldn't potentially be within the Brexit window, i.e. the next 18 months, 2 years. So the net result was that the pound sold off quite strongly into the bottom of its range. We'll look at the charts in a moment. But we have got something that's really quite significant today that to a certain extent started yesterday with the US dollar PPI month-on-month figures. At the last meeting, the FOMC were remaining quite bullish. They were remaining quite hawkish in terms of rate rises. But the underlying information being that they were still on course for 2 rate rises this year. The market's anticipating 1 in June. However, we had some poor data. Ahead of that meeting, we'd had some very poor non-farm figures. Now, they were as such corrected last week when we got some better non-farm figures, and that tended to support the FOMC's comments that they were anomaly, these recent poor data. Now, on the PPI, this is the last 5 months before yesterday's decision. You can see we'd had very positive information for 4 months going up to April. Those 4 months all exceeded the forecasted figure, and then April missed that figure, so we got that downturn there. But as the FOMC suggested, that begins to look like an anomaly when you see we get a very strong figure in for the data that came out yesterday. Against a forecast of 0.2, we saw 0.5. Now, going into today, the data that really the only data for the day is the CPI month on month and the core CPI month on month. They're the only 2 red flags. And what I've done is I've pulled up the same data here for the last 5 months. And if you see this one on the left is the CPI month on month, we can see we had target or forecast, ahead of forecast. Then we had a bad figure. So if the FOMC is correct, we can expect this to follow the PPI and get a strong figure in, at least on today's expectation of 0.3%, which is the current forecast. Similarly, on the core CPI, we've had forecast, ahead of forecast again, and then a negative below forecast. So again, we'll be looking for that to turn back to the positive, or at the very least for it to come in at the forecast for this afternoon, which is 0.2%. Now, I think if we get purely the forecast on there, we'll see some dollar strength. I think that will confirm that the markets are still very much expecting a June rate hike from the Fed. If we get some really strong figures and they replicate this type of figure here, I think we could see that being the start of getting a decent bull run going on the dollar. So, there are a couple of other things today that I'd forgotten about. I missed down here. We've also got core retail sales and retail sales, but these are the ones that I'm interested in, and I think they could put us back into a position where we've got some more significant and ongoing dollar strength. Obviously, if the figures go the other way, we will clearly, and that's just as possible, we would see that as disappointing the dollar bulls, and we'd expect to see a sell-off in the pound and a rally on euro and a strengthening of the yen, etc. If we go over to the charts, here is the dollar index. We had a spike up yesterday on that PPI data that came in yesterday. Price spiked up. It spiked up above this long-term trend line that we've been below for a number of weeks. We're obviously coming back to potentially retest that, or are retesting at this moment in time. If we do get good data on that CPI data today, I would anticipate that price pushes through as we approach the $100 level here on the dollar index. That remains a very key level. If we can get above that, we'll very clearly be bullish on the dollar once again. At this moment in time, you can see this week we've had a couple of days of Monday and Tuesday, really big bars, big continuation bars, and a bullishness following the sell-off on the euro when we got the anticipated result from the French presidential election at the weekend. Going over to the yen, well, as I said, similar here, we had a couple of days of clear weakness on the yen into that dollar strength. We're now somewhat range bound here at this moment in time, looking for something to drive markets again, be it a break to the top or a break to the low, and that I think quite possibly will be dependent on those CPI data today. Over on the euro, while the euro's confined within this sort of range and maybe even in a smaller box range through there, clearly we had the buy the news, sell the event, French presidential election. We had two very bearish days, and now we're confined very tightly with these doji bars here. If we get that dollar strength, I'd expect to see a breakdown to the downside here. Key level through here is for me about 1076. Certainly a break above $100 on the dollar index and a break below that will for me clearly give us that bias that we're looking for. That may be a bit too much to expect today, but certainly going forward that would give us a break back below this matching downward trend. So I'm thinking that we could have a test of $100 on the dollar index at the same time as we're retesting this downward trend line here. And obviously what happens there would correlate between the two. Over on the pound, well, again, we're very much in the range we've been for the last couple of weeks. We had a big sell-off yesterday based on the Bank of England comments, etc. Again, there doesn't appear to be anything specific to drive outside this box range other than what I've already talked about dollar strength to bring it back to the downside. There seems to be a bit more of a negative picture around Brexit at the moment. We seem to have some positiveness, but we've still got the election ahead next month. The market still very much expects Theresa May to win that election. with a much bigger majority, which gives, shall we say, the UK's negotiating position with the EU a significant boost, and the ability to act without the same need to go to vote, because those votes will be inevitable anyway. Okay, over to the commodity currencies. Here we've got the Aussie. Clearly we've had a big run to the downside here. We're looking to, again, basically, if we get that dollar strength, we can expect to see these lows. I think that we are going to see this low down here at some point. The question is, how do we get there? Are we going to see a pullback to this intraday level here that I've got marked before we come to the downside? As you can see, I've got an end of day trade here that are based on my weekend analysis. So that's still valid. If we don't get dollar strength, we could well see a pullback to this level here before the move down. But as long as we stay below this trend line, I'm still bearish this market. It's just about waiting for an opportunity to get into the market at a high probability area. Over on Kiwi's really quite interesting at the moment. We're down at this very 6850 level through here. We've had a very bearish move we had overnight yesterday, based on the RBNZ statement, press conference, and subsequent outpourings from the governor. Clearly we had a break of this level here. Now it will depend on who your broker is, whether you've got a daily close below this sort of level or a significant daily close. On my broker that wasn't the case, so I haven't been in a position to look for pullback trades to trade the short side. That would be purely technical. I do want to see a break of this trend line. The interesting factor is, up until last week's data, we had a COT extreme long signal here. Price reacted from that, and that signal actually disappeared. Sorry, that was 2 weeks ago. The signal last week had disappeared. So in principle, we don't have a signal at this point here. I'll be looking very much to see if we get a signal backing on the COT data at the weekend or later today. If we do, then clearly what happens here will be significant. Quite possibly we will break and then be looking for the next major level, which we will consider as being the new COT signal if we get that close, significant close below the trend line and this level here, because the previous signal here will have effectively been ignored. Once we get outside that triangle, then obviously if we've got another commitment of traders signal on this level here, which is the next level of major support, then we would be looking, and our bias would still be to the long side in this market. If the signal hasn't reappeared, then our bias would turn to the short side, particularly if we've got that dollar strength coming into play. Okay guys, that's it for the week. I hope you've had a successful week. I know in some markets it's been somewhat range bound. It's also been predominantly intraday again. Hopefully if we can get something happening on that CPI data, we might see something that will give us some good markets to analyse over the weekend, and go into next week with some more promising opportunities. Okay, if you've got any questions, just pop onto the Phoenix Blue website and ask the question on the contact page. You can ask us through the YouTube channel. At the end of this video, you can leave comments there or things like that. And if you want to ask me anything specifically, my email is tom@phoenixblue.co.uk. Okay, have a great weekend, and we will be back with you on Monday to see what the markets have got to offer next week. Goodbye.